Welcome to Explain the Charts, your go-to source for in-depth market analysis. Today, July 30th, 2025, we're diving deep into Apple stock, looking at both the latest news and critical chart patterns that could dictate its next big move. Apple's recent performance shows a stock that has certainly faced headwinds. While it's down 2.62% over the past year and underperformed year-to-date, we've seen a promising 1.03% increase over just the last 2 weeks, closing yesterday at $211.27. This comes within its broader 52-week range of $169.21 to $260.10. A major event on the horizon is Apple's fiscal Q3 earnings report, scheduled for release after the bell tomorrow, July 31st. Analysts are largely optimistic, with a moderate buy consensus and an average 12-month price target of $234.94, suggesting an 11.2% upside from current levels. They anticipate a 4% year-over-year revenue increase to $89.34 billion and earnings per share of $1.43 for the upcoming quarter. This positive outlook is underpinned by continued growth in Apple's high-margin services division, which reportedly grew nearly 13% in the first half of the year with impressive 75% margins. Innovations like the rumored foldable iPhone and expanded Apple Intelligence with recent OS updates are also seen as significant long-term growth drivers, bolstering Mac sales and market share. However, it's not all sunshine and rainbows for the tech giant. Concerns over potential tariffs remain, with some analysts projecting an additional $900 million in costs for Q3 alone. Regulatory scrutiny is also intensifying, with Spain's antitrust agency expanding its probe into App Store practices and Britain's watchdog also stepping up its oversight. Furthermore, Apple recently lost its top spot in China's smartphone market to Huawei in Q2 2025, now sitting in 5th place, which is a significant competitive setback. Adding to the caution, insider sentiment shows more selling than buying in the past 3 months, a signal that often raises eyebrows among investors. Now, let's turn our attention to the charts and see how these narratives play out in the price action. Starting with the one-day chart, we can observe Apple's journey over the past year. The stock began March 2024 around the $173 mark and experienced a strong rally through most of 2024. A notable surge occurred in June 2024, likely reflecting positive sentiment around new product cycles and the introduction of Apple Intelligence. This propelled Apple from the $193 range to highs near $220 in mid-June. After some consolidation, the stock saw a sustained uptrend, peaking at its 52-week high of $260.10 in late December 2024. This impressive run, however, was followed by a sharp reversal. The period from January to April 2025 saw significant bearish pressure, with the stock plunging from its December highs. We witnessed a particularly steep decline in late January, potentially linked to initial whispers about slowing growth or increased competition in key markets like China. This downward momentum culminated in Apple hitting its 52-week low of $169.21 on April 8, 2025, representing a substantial year-to-date underperformance consistent with our news report. This sharp drop highlights the sensitivity of Apple's stock to perceived weaknesses, even amidst its strong ecosystem. The Forbes article, published shortly after this period in early May, speculated that the stock could still return to $250, citing Apple's strategic pricing power and supply chain shifts as mitigating factors against tariff impacts. Following this dramatic low, we saw a significant bounce back in mid-April 2025, demonstrating strong buying interest at that deep discount. Since then, the stock has been trading in a somewhat choppier range, largely between $195 and $215. Let's zoom in on the 1-hour chart to get a clearer picture of the most recent price action, particularly over the last 2 weeks, where the news indicated a modest 1.03% gain. Focusing on the period from July 9, 2025 to July 18, 2025, using the 1-hour chart data available, we can examine the price action. The price has generally held above the $208 level, which appears to be a short-term support zone established during this recent consolidation. There have been minor pullbacks, but each time buyers have stepped in, preventing a deeper fall, suggesting a degree of underlying strength as we approach earnings. The volume has been relatively consistent during this period, with no extreme spikes signaling major shifts in sentiment, apart from some activity around the current price points. Now, for the 15-minute chart, let's look at today's intraday movements on July 29, 2025, leading up to the market close at $211.27. We can see the stock started the day around $214.175 and experienced a fairly volatile session. Early afternoon, we saw a significant drop from around $214.81 down to $210.82, showing clear intraday bearish pressure and a test of lower support levels. This sharp move was accompanied by elevated volume, indicating strong selling interest at those higher prices. However, the price found support around the $211 level, with subsequent 15-minute candles showing some recovery before settling at the $211.27 close. This demonstrates immediate support around $210.80 to $211 on an intraday basis. Looking at key price levels, short-term resistance for Apple is currently around the $214 to $215 mark, where it struggled to break through recently. A more substantial resistance lies around $220, which has acted as a pivot point multiple times in the past, including highs in early July 2024 and September 2024. Beyond that, the $230 to $235 range represents a critical psychological and technical resistance, corresponding to prior highs in August and October of 2024, and even January-February 2025. On the support side, the immediate short-term support is around $210, as observed in today's trading. A break below this would likely see Apple test the $200 psychological level, which also served as support in early June 2025. The next significant support is around $195, based on the lows seen in May and June 2025. Should that fail, the April 2025 lows around $188 and ultimately the 52-week low of $169.21 would be in play as strong long-term support zones. For traders, paying attention to volume is crucial. High volume on a break of support or resistance reinforces the move's validity. The upcoming Q3 earnings report is the most significant short-term catalyst, which could either confirm the recent bullish analyst sentiment or highlight the ongoing concerns. From a bullish perspective, Apple's fundamental strength, driven by its innovative product pipeline like the foldable iPhone and robust services growth, provides a strong foundation. The company's ability to potentially raise iPhone prices and strategically manage its supply chain against tariffs could further boost profitability. The recent analyst upgrades and price targets above current levels also signal confidence in the company's future performance. Furthermore, the strong rebound from the $169.21 low in April suggests that significant dips are seen as buying opportunities by long-term investors. Conversely, bearish arguments center on the macroeconomic headwinds, including persistent inflation and potential for wider economic slowdowns, which could dampen consumer spending on premium devices. The escalating regulatory scrutiny, particularly regarding the App Store, poses a risk of fines or forced business model changes. The competitive landscape in China, where Huawei has gained ground, remains a significant challenge for Apple's largest international market. And the insider selling data, while not conclusive, often indicates a lack of conviction from those closest to the company. In the short term, the market will be keenly watching the Q3 earnings call tomorrow, July 31st. A strong beat on both revenue and EPS, coupled with optimistic guidance for the upcoming quarters, particularly around service growth and new product launches, could propel Apple past the $215 and potentially even the $220 resistance levels. The likelihood of this happening is moderate to high, especially if management provides clear strategies to mitigate tariff impacts and address China market share challenges. Conversely, if Apple misses expectations, or if commentary on new product demand or regulatory risks is less than positive, we could see a retreat towards the $200 or even $195 support levels. The probability of a bearish reaction is also moderate, given the existing concerns and the stock's recent underperformance. For long-term investors, monitoring the execution of Apple's strategy for the foldable iPhone and advancements in AR/VR technology will be crucial indicators of future growth potential beyond 2025. To recap, keep a close eye on the $210, $215, and $220 price points as immediate support and resistance zones. Significant long-term support exists at $195, $188, and especially the 52-week low of $169.21. On the upside, breaking above $220 could open the path to $230 to $235, with an ultimate stretch target of $250. The Q3 earnings call on July 31, 2025, is the most important upcoming event. Strong performance here could invalidate bearish short-term setups. Look for strong volume accompanying any major price movements, as this confirms institutional interest and conviction behind the trend. This isn't financial advice, but a comprehensive look at AAPL's potential paths forward based on current data and news.